Hello and welcome to today's video. I'm Ragini Mukundan, a Microsoft Dynamics 365 ERP functional consultant at Cetas. This is part 3 of the series Understanding COGS Calculation in Microsoft Dynamics 365 Business Central. In this video, I'm going to demonstrate what exactly happens when you record a purchase in Business Central from PO creation all the way to GL postings. I'll be showing what happens when you create a purchase order and receive it, invoice it, and the accounting entries in Business Central. Let's start with creating a purchase order. I have already created one in the system. In this case, I have ordered 5 units of the Seoul guest chair from this vendor. Creating the purchase order is just the starting point. At this stage, it is only a document. There's no inventory value, no accounting impact, no change to the stock or financials. I'm going to proceed with posting the purchase receipt for this particular PO. The purchase receipt is posted. I'm going to view the posted purchase receipt document. If you see here, the system has recorded that I have received 5 units of the guest chair from this vendor. Let's see the entries that are created in the backend on posting the purchase receipt. So, with the posted purchase receipt, item ledger entries and value entries have been created. Within the item ledger entries, we can see that this entry is a purchase entry. The stock has increased by 5 quantities. Now, if we go to the value entries reflect the inventory value. Each item transaction creates one or more value entries that it applies to the corresponding item ledger entry. Within the value entries, we will be able to see what has caused the item ledger entry transaction. In this case, it is a purchase receipt. We will also be able to figure out what type of value entry it is. It could be the direct cost or indirect cost of the item, or cost due to revaluation, rounding, variance, etc. Here, this particular value entry is created to reflect the direct cost of the item. So, when you post receive, Business Central only updates the item ledger entries and the value entries. It increases the physical quantity in stock. But when the purchase receipt gets posted, no GL entries are created. To conclude, your financial statements are not affected at this stage. Let's go back to the purchase order and try invoicing the received items. At this stage, GL entries are created. This is the most important step from the accounting perspective. When I post the vendor invoice, Business Central performs two separate accounting actions. The first entry is the standard accounting entry that records the vendor invoice. Your purchase account is debited by rupees 33,849.99 and your payables account is credited by the same amount. This entry tells the system that we have made a purchase and we now owe the vendor. Then comes the cost transfer to inventory. Immediately after the invoice posting, BC performs a second entry. This is where BC finalizes the cost into the inventory ledger. Your inventory is debited by rupees 33,849.99 and your direct cost applied account is credited by rupees 33,849.99. This second entry is how VC moves the cost out of purchases and correctly loads the cost into the inventory account. The direct cost applied account is used as the clearing or balancing account. The second entry ensures that the purchases do not sit as expenses in the PL and they get properly shifted to inventory on the balance sheet. What happens after these two entries? At this point, inventory value on the balance sheet is correct. Vendor payables are correct. No expense has hit the PL. Direct cost applied account is balanced. The system is now perfectly prepared for COGS during sales. In short, in Business Central, when you record a purchase, the purchase order does not record any impact. The purchase receipt records only the item quantity related details. The purchase invoice records two entries, which is purchases account debit to payables and inventory account debit to direct cost applied. These two entries ensure that the purchases do not hit the PL and that the inventory is correctly valued. This completes the purchase process and sets up the system for accurate COGS calculation when sales happen. That brings us to the end of today's video. If you have any questions or would like us to cover specific scenarios, feel free to share them in the comments. Don't forget to subscribe to our channel for more practical Dynamics 365 insights and stay tuned for the next video in this series. Thank you for watching.